Key International, we're a Miami-based developer investor. We're vertically integrated. We focus primarily on residential and hospitality.
I think nationally, it's a time where development just seems tough, but you guys are still active. You guys still have a lot going on. You guys have also done some incredible deals from 1010 Brickell to Eden Rock and many more. Why the beach for hotels?
God's not making any more of it. Supply is the number one driver.
The 6.5s and 7s that you guys are solving to, like, are you really seeing that right now? How tough is that to find right now?
Super tough. Definitely not easy. When we go into it, we usually build it or design it in such a way that, believe we're going to hold it forever.
No shortcuts.
Right.
Yeah.
That's at least the intention. Everyday life, you're like, wow, Miami is, the most exciting city in the world, almost, right? Everybody's moving from anywhere in the world, right?
Yeah.
Like South America, Europe, but then you see the numbers and it's a different story. Absorption maybe plateaued. Rent growth is definitely plateaued. Being disciplined is what I've been, what we've been trying to do internally on the sites. We're seeing as much dirt as ever and probably more than ever.
The shadow inventory on the rental side is very real. We like that garden style, first ring suburb product where the schools are a little bit better. There's a little bit more stickiness to the residents that are living at your product. Can't wait for the shitty weather to pass by in a couple of weeks and we'll be back into the swing of things up here in Miami. All right, welcome to another episode of Deal Flow Friday. I'm your host, David Moghavem, and today we got Martin Aranzabe from Key International. Martin, how you doing?
I'm doing great.
It's great having you on. It's great having you here.
Thanks for having me.
You're also the first to experience the new setup of the studio. How do you like it?
Exciting. It's amazing. It's a full production.
Full production here. Hi, hey everyone.
Hello to the team.
Hello, me and myself and I. Martin, good to have you on. You and I, we've been talking multifamily development in South Florida for some time, from when we first met at Casatuno Cucina when my brother introduced us.
Yeah.
And then we saw we had some mutuals, Omar, all them.
Shout out to Nathan.
Shout out to Nate, honestly, the Babson connection, which we'll get into as well. I wanted to have you on, talk a little bit about South Florida development. I think nationally, it's a time where development just seems tough, but you guys are still active. You guys still have a lot going on. You guys have also done some incredible deals from 1010 Brickell to Eden Rock to 1100 Biscayne and many more. And so maybe give a little bit of an intro on Key International, on yourself, what you guys are busy with, what you guys are doing, and then we'll dive into the market.
First of all, thanks for having me.
Of course.
It's my first podcast ever, so
wow,
it's exciting.
It's an honor.
Thank you. So Key International, we're a Miami-based developer investor. We're vertically integrated. We focus primarily on residential and hospitality. On the residential side, we do ground-up construction of condominium, usually targeted towards luxury segment, I would say.
Yep.
And the majority of that is, we sell pre-construction, and then once we get to enough sales, we will go on and build a building. And we also have a rental platform, and that is the majority of that is ground up. We focus on anything from garden all the way to high rise. Although I would say that the great majority of our pipeline today is in the garden, maybe up to like the most efficient 8-story building that we can find, or opportunity that we can find. And then the other half of our business is hospitality. So we have a portfolio kind of scattered throughout Florida for the most part, somewhere between 4,000 to 5,000 keys. We focus on beachfront hotels, mostly leisure. You mentioned hotels like the Eden Rock or the South Beach Marriott. Those were kind of the two that got us started in the hospitality world. We've since transitioned and we've done anything from that to a Hampton in Destin, for example. We like leisure. We like drive to markets. And then we also have a platform or a footprint in Europe. So we're doing stuff in Spain. We're doing stuff in Portugal. We're currently under construction on a six census. So I would say, aside from residential and hospitality, we touch from time to time other asset classes. Like we bought an RV park in Northeast Florida. again, similar drivers to our leisure hotels, so it's a type of business that we understand, and we liked it for that reason. Um, and we're trying to do more in that space, and then we'll get into funky stuff like that, or an occasional office building if we like the story, retail here and there. But I would say for the most part, we do hospitality and residential.
Are you guys doing any developments where you're combining the resi and the hotel as well? Because I know that's pretty common in Miami as well.
It is common in Miami. We don't love urban hotels, so that's kind of where we struggle with that hybrid. We've definitely looked at it. We've chased a couple of deals that have that. Mostly condos and hotel on the beach. We would love to do something like that.
Yeah.
It's just usually condominium can pay the most for the land. So, anytime that you can do sellable square feet, you'd rather focus on that than give any allocation of a square footage to a hotel.
So why the beach for
Well,
hotels?
God's not making any more of it.
Yeah. Supply constraint.
So I would say it's mostly supply is the number one driver. We have a hotel in pretty much every major coastal market from Miami Beach, although started in the Keys really.
Yeah.
Our last acquisition actually was the Perry Hotel in the Florida Keys
Okay.
at the entrance of Key West, all the way up to Jacksonville Beach. And all the markets, are a little bit different, but they all share similarities. And number one is the constraint of supply. It's very hard to find land for hotels. Again, because if you can build a condo, you can get a much higher residual land value for a condominium execution than for a hotel. So it's very rare to find a piece of land that's either in title or that the math makes sense for
Hmm.
hotels. I would say one market that we stay away from is Daytona. But other than that, if we can find a piece of land that we can title north of 100 keys,
What's the drawback with Daytona?
land, there's a lot of dirt still
Too much
available.
still
Yeah.
available. Yeah. So you guys are targeting on the hotel side at least, supply constrained beach, and you've found your niche. You probably found your own type of amenities that you can build with it, your partners that you can partner with,
Yeah.
Six Senses, whether it's like
Yeah.
international or something
Yeah, I
like
mean,
that.
we're also doing, stuff more select service. The last hotel that we finished in the northeast coast of Florida is a Spring Hill Suites in
Hmm.
Jacksonville Beach. So, there it's similar idea, supply constraints, drive to markets, your close proximity to Orlando, to Georgia, kind of big hubs that people can drive to or drive from.
Yeah.
And we found that to be a niche, and we like that space. And then when you're building this like service boxes, you also gain a lot of efficiencies
Yeah.
with margins and so forth.
It's cool that you guys have a lens on both the multi and the for sale and rental side, and then the hotel side, because multi, yields are super compressed compared to hotels. You're probably getting a lot more cash yield, but different risks, different profiles there. What on the multi side, switching gears a bit, are you targeting today? What type of yield on cost are you solving to? What's your North Star? I know you guys go vertical a little differently than maybe most merchant developers. So maybe go a little bit into that and what your North Star is into identifying a good deal today.
Yeah, so we're trying to build north of a 6.5 untrended yield on cost on most of our multi deals. Ideally, you're close to a 7, but hard costs have creeped up a ton,
Oh,
and
yeah.
and 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 you can make a spreadsheet say whatever, but
Hmm.
when we kind of put our true and honest numbers together, that's usually what we try to shake out between a 6.5 and a 7. We still like garden a lot, particularly in South Florida. If there's still any dirt available for that, it's very rare.
Yeah. It's hard to like make garden work today, right? In South Florida? Correct me if I'm wrong, or like you just have to go further north past Broward, maybe?
Yeah, so we have, we still look at a lot of dirt and we chase a lot of dirt that we would love to put garden on. It's just hard to come by. It's
Yeah.
either not zoned or you're not getting the right amount of time from the seller, or the structure's off. Could be like a defunct or like a dead mall or like a dying mall, right? Or an old office building, but that comes with its zoning issues. You have to
Yeah.
rezone
So
it.
you have to rezone it. That's risk of its own,
Right.
right?
So if you don't get time from the seller, which ideally is what we want, you're taking on, potentially more risk than we're willing to do. So I would say we're focused on garden in South Florida wherever we can find it, mid-rise where it makes sense, and then we like certain markets of the west coast of Florida, like Tampa and St. Pete in particular.
That West Florida markets are, ripping
Now,
from.
are you guys doing anything on the west coast?
Yeah, West Florida.
West Florida, yeah.
I mean, we've been trying to break into Tampa forever. We've had a lot of success in Orlando,
Okay.
and I feel like those two are a bit synonymous. But we found that Tampa just trades a bit tighter
Yeah.
than Orlando. I
Yeah.
think for good reason too. Like there's some great drivers there, and inbound migration there is really strong.
And supply constraints are a little bit higher, right?
Yeah,
Like, especially in the core, like you can go out north to
I mean,
Pasco County.
Orlando, they're still building. Like right now,
Everywhere.
they're still building. It's
Yeah.
like crazy supply. Um, it's
Yeah.
past peak, but it's just plateaued. Like people are just still building, but just not as much. Whether as maybe in Tampa or definitely in some other Sunbelt markets,
Yeah.
it's stopped.
Right. No, we really like the growth story in Tampa St. Pete in particular.
Hmm.
Specifically speaking about the core.
Yeah,
The rent to income ratios are still healthy. You can still deliver product for a good basis.
yeah.
And those are the type of things that we're targeting.
Yeah, and to your strategy, I think West Florida, you can probably find some more garden
For
style type
sure.
of land than maybe like in South Florida.
Definitely. I mean, it's still not easy, but whatever there you find, at least you can get a decent structure on,
Yeah.
which is rare down here.
So the 6.5s and sevens that you guys are solving to, like, are you really
Ideally,
seeing that right now? Are you like I'm sure there's like a few diamonds in the rough, but how tough is that to find right now?
super tough.
Yeah.
Definitely not easy. Another thing that we like to do when we can is get more aggressive when we're tying up deals, right? Where it makes sense. If we really like the third, and that's also part of having that private capital aspect to our firm, which helps a lot, right? It's really our own balance sheet that we put to work. At least on most of the pre-development stuff, right? When we
Yeah.
go vertical, it's a different story, and
Right.
we have a great amount of partners that we've done business with and that we continue to do business with. But on the pre-development stuff is usually our own balance sheet for the most part.
And I mean, that's definitely a key as if you want to be a successful developer in this business and any market is having that balance sheet protection when you're doing pre-dev, not putting debt on land and being able to stick it through, tough it out. And then once you're vertical, probably capitalize it, redo the cap stack in a different way where
Right,
you can take it through.
right. And
After you,
we're also closing on land with our own balance sheet,
yeah,
right? Which not every group does. Some do, but not every group.
yeah. So once you guys are done going vertical, at least on the multi side, like you guys do lease up, do you guys try to flip out of it, hold? What's kind of like the structures there usually?
What the idea is, and kind of usually what ends up happening, may differ. I
Yeah.
would say when we go into it, we usually build it or design it in such a way that we believe we're gonna hold it forever.
No
That
shortcuts.
right.
Yeah.
That's at least the intention, right? Like
Right.
we design it in such a way that we would want to live there, or we would want our friends or family to live there. But sometimes it happens that you build it and then the market does whatever it does, and then you get a good offer and it makes sense to sell, and then we'll sell.
Right.
So I would say our focus or idea is to build it and keep it. It doesn't always happen that way.
So going back to kind of the yields and how difficult that is to get the 6.5s, I feel like if you have the ability to go longer, that you don't have to flip out of it. You're not a merchant developer, a typical merchant developer that you have to flip out of it. You are able to have conviction and lean in on the right site.
Right.
You will see past the numbers and say, okay, maybe it's a low 6 instead of a 6.5, but I have conviction and I can hold on to this. And maybe if it's a low 6 on paper, I can still get this cash yield that's better than what you can buy today with, if I were to refi it.
Yeah, and that's I would say another thing that I kind of learned from my mentor in the office or my mentors in the office is we like to focus on good dirt
Yeah.
so that development kind of works in dog ears. Like it takes so long for a development to go from the initial kind of due diligence or even when you're looking at the deal to when you put a shovel in the ground, that in between that time frame so many things move that ideally you're protected just on the dirt, right? It's just
Right.
on the real estate. Like what is it that you're building, and what does the dirt look like? So we tend to focus on those opportunities, which has proven to help us when markets get a little bit more complicated. And another thing that we've been lucky enough to be able to do is just structure land in such a way that we kind of have the ability to play with time. So we've done a number of deals whereby we get just enough time from the sellers so that we don't have to close or we're not forced to close
Yeah.
until the right time.
One of the points I wanted to kind of pick your brain on, if you kind of look on CoStar, I'm not here to rip on South Florida at all, but you're seeing a lot of supply
Yeah,
in the pipeline. You're seeing absorption starting to plateau a bit. I think I pulled some stats like right now there's 16,000 units under construction. By the way, this is just like Miami-Dade.
just Miami-Dade,
Yeah, so
not South Florida.
I think this I pulled this without even pulling like Broward, and
Got it.
so I don't think Broward has as much supply, but there's that, that adds to it, and
So
it's
it's like 12,000 units. What is it?
yeah. So Miami-Dade is 16,000 units and 12-month deliveries 10K.
Got it.
So that's basically like 26,000 units coming online. 12-month absorption was 6K the past 12 months. At peak, it was 14K. So my question is, as a developer, and again, like trying to solve to their yields, like how are you getting comfortable with some of that supply? And end of the day, this is a supply demand type
Yeah.
of game we're in. And you hear the buzz. Like, I mean, we both live here. We both love Miami. We see it. There's a lot of people living here and it's getting more expensive, but then you see all the supply. So how do you kind of anecdotally weigh what you're seeing on the ground with what you're also seeing on the numbers with some of the supply?
Right. It's tough. And like you said, your everyday life, you're like, wow, Miami is, the most exciting city in the world
Hmm.
almost, right? Everybody's moving from
I think it is.
anywhere in the world, right?
Yeah.
Like South America, Europe.
Yeah.
You're starting to see people from Asia and obviously domestically too. So that's one thing, but then you see the numbers and it's a different story. That being said, absorption maybe plateaued, rent growth is definitely plateaued. Um, but we're still seeing, and it's all very specific to pockets and submarkets, right? So
Right.
like downtown may be different than Wynwood, than Edgewater, than Brickell, for example.
Yeah.
So we try to focus as much as we can on lots that we really like and study the micro market as much as possible
Yeah, for sure.
and focus on what are the fundamentals for that specific site when we look at properties, right? That is on the rental side. On the condo side, it's a bit of a different equation. Usually you're selling in pre-construction, so you want to make sure that whatever your marketing pitch is well put together, that you're selling something that is special. And I imagine that it's only multifamily, not
That was just multi.
right.
Yeah,
So you also have a lot of shadow inventory coming from the condo market,
for sure.
that will see how it plays out into multi. So I would say being disciplined is what we've been trying to do internally on the sites. We're seeing as much dirt as ever and probably more than ever, just because people that bought may be now considering to get out because of whatever reason the math didn't pencil, or because dirt has gone up to a point that it makes sense for them to sell, or whatever the reason may be. Um, so we'll see how it plays out. For the time being, I think we're just we're staying as disciplined as we can.
The the shadow inventory on the rental side is very real.
Yeah,
And yeah, I don't think this includes it. I think what's unique to Miami is how you can fund with pre-construction deposits on the sale side, right? And that's why you see a lot of condos being built rather than apartments, because you can't do that with apartments, and then you compete with shadow inventory on the back end. Whereas on for sale product, you can now equitize your deal with pre-construction deposits from buyers, and then you can go vertical with that, much less equity that
right.
you have to put
So
down
on
to
condo, the
develop.
the rush just seems to be sprint to 50% sales as much as it can, so you can kind of funnel that equity or deposit equity on top of your own equity to the construction of the development. There's a lot of units that are under construction or starting construction or soon to be delivered in that space. Most specifically I don't think the kind of ultra luxury will compete with any other rental, right? But I would say more the kind of commodity product, for lack of a
Right,
better term.
right.
Maybe some of the inventory that was pitched or sold as short term rental, that will come online, and then I guess the first step will be to see how that short term rental execution goes. Right, like you have a lot of units that are renting out on a short term basis and almost mimicking a hotel.
Yeah.
And it's
And
all
you also have a lot of foreign capital, high net worths that are just buying up a couple of condos here and there, renting them out, parking their money in US real estate.
Yeah.
And so just because people aren't going to necessarily live there doesn't mean they won't buy it. They'll buy the condos and then they'll maybe rent it out. So that's where like the shadow
Right.
inventory comes in.
Yeah, and that's kind of been done right over time.
Yeah.
Miami went through so many ups and downs, especially on the condo side.
I feel like it's been an oversupplied market up until COVID, basically.
I mean, look, I wasn't I wasn't around working
Yeah.
to know exactly kind of how it went down. The stories that I hear, is that kind of speech of Miami's oversupplied has been the case at least 2 or 3 times in recent history.
Right.
Specifically talking kind of in the mid 2000s, right? Supposedly there was inventory for decades, and
Yeah.
came 2012, 13, 14, 15, all that supply was gobbled up, and then
And
the
then
next
they
wave
next wave
started
started
again,
building.
and
Yep.
then it's kind of kept going since.
Yeah.
Maybe there was a slowdown somewhere between 17 and 2020, right?
Right.
But it's still going, and you see it every day. People are coming in, and jobs are moving in, and higher earners are moving into the city, right? Like I think the net migration is one thing, but I guess the migration and what that means for income levels is different, right? Like
For sure.
you
Yeah.
definitely have access to higher paying individuals now, which kind of helps on the rental side, and then also on the shadow condo inventory.
Yeah, that's true. That's true. I think the net migration, as you said, might be like netting out as like people that can't afford move out and people that can't afford move in, but income levels are going higher. And that speaks to the rental growth and things like that and absorption in that regard.
And I think, as the city continues to densify itself, right? Like Miami has high density zoning pretty much all throughout the core. And I think I was reading a stat, or maybe I listened to it in some sort of podcast, that we can still 10x the density that we have built today.
Yeah,
Um, and what would be worrisome is to see a city that goes so dense, but then doesn't necessarily have the infrastructure. So I would say that that's why we're trying to also
that feels
focus.
like Brickell, honestly.
Yeah, but I mean,
This is the traffic.
you definitely have a traffic issue.
Yeah,
But some of the public transportation, we're hoping that it'll improve, and I
yeah,
think the county is doing some good things to, funneling funding into public transportation, and with a metro mover, which is still, I think, underutilized.
yeah.
I don't know how. I know you work in downtown and live in Brickell. I don't know if you ever
I
use
use
it.
retro. I like to walk, but if it's a little too humid or it starts raining in the morning, I'll definitely use a Metro
Yeah,
Mover.
I think the metro mover is great.
Yeah, it's great. It's great.
It's great for downtown
Many people
Edgewater.
use it. Many people use it. It's as you said, it might be underutilized. I think just maybe with like the efficiencies, like it's only efficient for me to get from my place to the office, but it's not efficient for me to get from the office to my place just because
Right.
of like,
Connectivity.
yeah, exactly.
Yeah. So we're focusing also on nodes like that, like
Yeah.
very, very highly connected nodes that where it kind of makes sense for people to maybe live elsewhere and then work in Edgewater. Sorry,
Yeah.
work in Brickell downtown and maybe live in Edgewater.
So on that note, what kind of pockets are you most bullish on?
Well, we really like Brickell.
Hmm.
We have a
Even
few.
with the supply, even with everything, I think
Look,
you,
I mean, I think Brickell within
yeah,
itself, it's kind of bifurcated into maybe three, but if you want to simplify it, two, right? Like East Brickell and West Brickell, you can also add South Brickell to that.
yeah,
Um, we really like that submarket. We really like certain pockets of Edgewater, where it makes sense. Obviously the beach, anything that you can find out there in certain pockets of it, or if not most of it, is great. We have a couple hotels on the beach. We have a few opportunities in Brickell. So I would say we're focused on that in the core of Miami.
hmm,
And then anything that you can go suburban and add kind of lower density product, we still think it's cool.
double clicking on that like suburban story garden style because that's our bread and butter. Where are you looking in terms of building in those regards?
So we canvas Miami as much as we can. I would say we're also looking north, Broward. We have a couple of sites that we either own or that we're looking at, to add that type of density.
Yeah,
We just finished phase one of a two-phase project in Delray Beach, together with in a joint venture with 13 Floor Investments. So we delivered the first phase. It's going well.
multi.
Multifamily, yep. For 5 and 3 story product. Um,
And that already got delivered?
that already got delivered.
Nice.
At least up well. Rates are good.
That's a great pocket of like, if you want to get some good yield for new construction. I think that's like a nice, because you want to buy anything in Brickell that's brand new.
Yeah. I
That's
mean, what
trophy asset, still in the fours. But I think in Delray you can probably get a little bit more yield and a great amount of demand.
Yeah, I mean, I'm curious to hear what you're seeing on the deals that you're chasing. We try to look at built multi. We just haven't had any luck kind of buying stuff at a yield that makes sense for us at least.
Yeah, yeah.
At least
Well,
in at least in markets that we like.
you're not buying six and a halves. You're not
Right.
buying six and a halves for multi, but you're buying below replacement costs. You're probably buying a five cap today for a new construction. Maybe in Delray could be five, maybe a low five
Yeah.
if you're lucky or something like that. Depends how you look at concessions and how you see that burning off. Brickell's definitely, four caps,
Right.
something
Well, I
like
don't know.
that.
I don't remember the last time anything in Brickell traded.
Yeah,
It's
exactly.
been a
But
while.
like there's some off markets that kind of are like floating
Yeah.
and things like that. So you kind of like know where it's gonna price, where it's gonna be OV at. And then I would say Tampa new construction is I mean I would say is maybe like 25 bips wide,
Yeah.
depending on like the location, things like that. Orlando is maybe uh priced similar to Tampa, maybe like a touch wider on yield, which is why we kind of like Orlando. Is you get some good yield for new product and still have the inbound migration and all that, and it's Central Florida, so insurance is a little bit better. Um, and we like that garden style, like first ring suburb product
Yeah.
where the schools are a little bit better. There's a little bit more stickiness to the residents that are living at your
Yeah.
product. And the just I don't know, garden's just been our bread and butter forever, and it just feels like less. I don't want to say like capital intensive because like it has its own issues, but like I don't know. Sometimes when you buy like some of these high rises and trying to cure some of the deferred, it gets
Yeah.
a little dicey with
Of
some of the
course.
systems, the
Yeah, because one
MEPs,
bus is a huge number.
elevators, things like that. Yeah, so I like the 3-story walk up, like non-elevator service stuff.
Yeah, it's just hard to come by.
Yeah, yeah, exactly. I know you guys are well capitalized. You were just telling me before this you're going naked on a deal. That was the first time I've heard that. I'm just not in the development space. But for us guys that are capital raising right now, it's definitely harder than it's been since I've been in the business. I guess when you guys are going vertical, how are you guys capitalizing? Who are you partnering with? How are you strategically partnering with people and getting deals capitalized?
So the company has its own balance sheet, where we'll put a certain percentage of the equity ourselves, and then we'll go out and we'll raise the rest. Typically speaking, I would say is a lot of family offices or ultra high net worth that are still, we're still seeing a lot of that private capital for certain deals, and especially for, I would say, special, no pun intended, kind of longer term horizons,
Yeah.
and properties that are very well located, where you're building something truly special. That's where we're seeing that type of capital still very active. Of course, we also have other institutional partners for different types of deals or other deals, but I would say where we're seeing the most
But they're out
activity
right now. Yeah.
from the capital side, it has been on the private side, um, which is good and bad. We historically focused a lot on the private side, so it's something that I would say comes naturally to us. That being said, we've gotten our pipeline has grown, and then deals just on an individual basis have gone a lot larger. Land pricing, not so much, but I would say the big bulk of that increase has been hard cost, and the fact that where you used to do 250 to 300 unit deals, now maybe you're doing 350 to 450, right?
Oh, so you're saying density has increased?
On average,
Yeah.
on an average deal size, I would say density has increased for us.
Yeah.
Yes.
Yeah. Interesting. I wanted to switch gears a little. So we mentioned in the beginning, Nate was the one who introduced us, my brother,
Yeah.
the Babson connection.
Yeah.
And I've seen it from my brother. I've seen it from you. Like there's a really strong network and connection with Babson. I kind of wanted to pick your brain a little bit on how that's played out in your career and how you've been able to leverage Babson both on the education side with, entrepreneurship and that type of approach to life, and then also the network.
Yeah, I would say I'm super happy that I ended up there. Just like anybody else, I was looking at a few spots. What's been great about going to Babson has been how diverse the student body is, right?
Yeah,
You
exactly.
have people from all over the world.
Nate
Uh,
knows someone in every country at
right.
this point.
And
It's crazy.
that's a huge part of it,
Yeah,
right? Every major city that I go to, I'll either know somebody or a friend of a friend is there, right?
yeah.
So that's one huge positive. It's also a sneaky real estate school in the sense that a lot of people end up in real estate. I think a lot of that has to do with kind of the skill set, right? Like we're not Dartmouth in the sense that it's not it's obviously a good academical school. It's great. It's amazing, but it also attracts a lot of people with different skill sets. It's very social, right? Like people are always kind of out and about, meeting new people. So that's been good. And then translating that kind of background in school to Miami, it's been a good transition because it has a very strong Latin base, right?
Yep.
And Miami obviously is the capital of South America or Latin America. So it has a very strong foundation in Miami.
Yep.
So that's been a huge help for me. Like from all the way back to when I first got a job, right? It was two mentors of mine from Babson
Oh, really?
that
Okay.
actually connected me to where I am today at Key
Wow.
International. So that's been full circle. And then kind of as we started to do stuff and started to do deals, it's also been good to run into people that we know from back then or that we have a connection through school.
Yeah. I know Babson as a entrepreneurship school, and you were saying how they fall in real estate. I do feel like real estate is entrepreneurship end of the day.
Yeah.
When the venture is the property and the business plan. Yes, sure, it's a road that's been paved, unlike maybe some other ventures, but you're still pitching equity and you're executing on a business plan, and it's social, and that's very similar to entrepreneurship.
Yeah. It's almost like being like a movie producer or like a band director in the sense that you're dealing with a lot of different
You're
entities
orchestrating
in a
it.
lot
Yeah.
of different types of people in one particular project. Obviously, in acquisitions as well, and development too, in the sense that you're working from anything from attorneys to designers to architects to civil engineers, right? So working with different type of personalities and kind of putting all of that together kind of has its entrepreneurial, you know.
Yeah. You miss Boston at all?
I miss the Boston days. I don't miss, the Boston
The
weather.
weather, yeah, exactly. I think I don't miss the Boston weather, but there was something nice about having like 4 seasons, and the winters were
Yeah,
winter.
you
But
appreciate it. You appreciated the sun a lot more.
yeah, yeah,
But I mean, it's just life here is amazing, and obviously, I don't want to repeat the lifestyle that everybody knows about and talks about. But it's been truly life changing.
it's so good, and can't wait for the shitty weather to pass by in a couple weeks, and we'll be back into the swing of things here in Miami.
Yeah,
So,
exciting. Yeah, this winter's gonna be great.
yeah. Martine, really appreciate it. Thanks for hopping on,
Thank you for having me.
and looking forward to see what you guys do next.
Likewise.
Awesome.